You are welcome to another episode of Entrepreneurship Leadership Improvement Program, ELIP. This is episode 5 of this program. And today we'll be discussing top 5 investment options for beginner, where to start in 2025. And here we have with us an investment and entrepreneurship expert in person of Dr. Lukman Rahim from University of Brunei. So we'll be discussing this issue, top 5 investment options for you in 2025, where to start as a beginner. Prof. Lukman, you are welcome to the episode 5 of our program.
Thank you very much for inviting me to another edition of ELIP. It's my pleasure.
You are welcome, sir.
Thank you.
Prof, to commence the discussion, I would like to ask these questions. What factors should beginners consider when choosing their first investment option? For example, as we are entering 2025, what are those factors that beginners should consider when choosing any options of investing? Because, in our last episode, episode 4, you made mention of the fact that you need to invest what you save. So that's the reason why I'm asking you this question. You can go ahead, sir.
Okay, thank you very much. To simplify that particular question, we call it investment 101 because it's an investment tips for beginners. For beginners in 2025, if you want to go into investment, there are 5 factors to be considered. And I'm going to explain those factors succinctly and very clearly. Number 1 is knowledge and expertise. Don't go into investment if you don't have knowledge about investment and expertise in the area of investment you are going into. For instance, I am a lecturer, and by law, I'm not expected to be teaching full-time and run a business full-time. But obviously, I have investment interest in printing, oil and gas, agriculture, and of course, what is called mutual funds. These are 4 areas that I put my money. But I'm not doing it directly. I'm doing it with third-party and institutional investors. But these 4 areas, I have knowledge and expertise about them. So if I give somebody my money, I actually understood the dynamics, how it works. So knowledge and expertise is number 1. After that, the next one is risk tolerance. Investment is not bread and butter. Investment is not like, rice and beans. It has elements of risk and also certainty. So you ask yourself, what level of risk are you ready to take? Are you a risk lover? Are you a risk averter? Or are you risk neutral? For some people, they don't mind investing in anything risky. Those are risk lovers. So it means they have high level of tolerance for risks. The higher the risk, the higher the profit or return. That's the reality. But some are moderate investors and they have moderate risk tolerance. They want to put their money, but their level of tolerance is medium. But some who are the beginners, they're always afraid, oh, my 10,000 naira, I don't want it to disappear. Those people, they have very low risk tolerance. So put your money in investment with very little risk probability or propensity. Maybe you buy shares. Shares may not give you huge amount of profit, but you are sure of retaining your capital, even if the share does not appreciate. So that is what is called risk tolerance. The third one is financial goal. What is your financial goal? Do you want to be a long-term investor, medium-term investor, or short-term investor? You want to invest 10,000 naira or $10,000 and you want to return within 3 months. That is your goal, very short-term return. You don't have strength for long-term investment. You don't want to put your money in manufacturing that will take about 5 years to start giving you returns. That is what is called financial goal. If you don't have understanding of these factors, you are going to mess up and there will be problem in your life. Then the fourth one, which is very, very important, is the investment climate. Look at the economy. Is it the right time to invest? It's like somebody who wants to invest in Ukraine. Ukraine is not the right place to invest now. Or somebody asks, oh, come and buy property in Ukraine. It's very cheap. Obviously, it will be cheap because there is war. There is instability. People are selling their property and disappearing. So look at the investment climate. Is it really conducive to investment or not? If the answer is positive, then you invest. And if the answer is negative, obviously you don't invest. And the final one is the capital availability. How much do I have? Do I have 1 million, 500,000, 300,000? That determines what to invest in and how to invest. So these 5 critical factors, we call them investment 101 or investment factors to be considered by beginners. Thank you.
Thank you, Prof. From your discussion, may I ask that on the issue of being risk adverse, is it possible that, or does it mean that the more you invest, then there is possibility for you to have that propensity to tolerate more risk and invest higher?
In reality, these factors are mutually inexclusive. You can't remove one from the other. And that's the reason why I started with knowledge. Knowledge is very, very important. If you look at so many people who have problems with their partners or the mutual fund company, is because they don't have knowledge about how that business works. And also their financial goal is different from the financial goal of the organization. And also, when you talk about investment, what comes to the mind of people is profit, positive, and it's not. It's an amalgam of both positive, negative, marriage of risks and return. So all these are very, very important. Even if you have 1 million or you have 10,000, these factors are very, very important. So they shape how you invest, what to invest in, and what to get at the end of the day.
Thank you, Prof. Then I would also like you to share more light on the issue of, you made mention of some, you gave an example of some of the investment. So I would like to ask that, how do this investment option differs in terms of risk, return, and accessibility?
So the question you have asked in a simple term is how does investment options differ in terms of RRA? RRA simply means risk, return, and accessibility. When we say risks, you are talking about the level of uncertainty associated with that particular business. And when you talk about return, you are talking about the profit, what to expect when you invest, and accessibility, how easy is it to invest in that particular option. So let's discuss that with example, not theory. It's example, because these are things that I've done. The first one is government bond or sukuk. Bond simply means government instrument. Government raises money from private individuals and also from companies. When government wants to borrow, government sells bond. But in recent time, for those who are Muslim, who don't like interest yielding, bond, they created sukuk. So when government raises money from you, there is certainty that government cannot, disappear with your money. So in terms of risks, the risk is almost zero. Government is the biggest spender. When government does not have money to pay you back, government sells another bond. So in terms of risk, the risk is 100% zero. Then in terms of return, the return is also very certain. For instance, the first sukuk issued in 2029, I bought. And this year, government liquidated that particular sukuk by paying us back our principal, which is, I bought 250,000 naira. Then every quarter or every 6 months, government pays you return. So you can look at the example that bond in terms of risk is very, very good. In terms of return is very, very good. Accessibility is also accessible to everybody. It is announced on television, on radio, on the internet, when it is open, when it's going to close, when are you going to get your return, when are you going to get your capital. In terms of RRA, government bond and RIG and also Sukuk are very, very good. But you can't compare it with what we call cryptocurrency. Cryptocurrency in terms of risk is highly volatile, but the return is very, very high. The return is also cannot be predicted because when risk is very, very high, it's going to also affect the return. When there is a good economic climate for cryptocurrency to thrive, then the return will be very, very high and the risk will be almost nil. But in terms of accessibility, it's accessible to everybody. But in terms of the knowledge to actually manage it, not everyone can manage cryptocurrency because it involves high level of understanding. Saving deposits and also fixed deposit are also accessible with all the banks around. But in terms of return is also very stable because it is predicted, and the rate is also very, very minimal. We can say moderate. Then the final one that I want to tell us is something like oil and gas. Oil and gas is also accessible for those who are very close to companies doing oil and gas. You can invest in third party. You can invest in those who are middlemen, so it is accessible. But in terms of risk is also very, very moderate. We can't say low because at times the tanker could have accident. So if it is insured, you may recover your money. But if that person does not have insurance, then the rates will be very, very high. So this is how to analyze risk, return, and accessibility. So in 2025, before investing, ask yourself, have you done a risk analysis, due diligence, looking at the risk associated with that particular business, the return associated with that business, and how accessible is that particular investment option? If you are crossing the expressway as a wise person, the first thing you do is look at the right, look at the left, and also quickly look at the left again before you cross. Don't close your eyes and just cross. Oh, I have trust in God. Oh, I have trust in my coach, in my mentor. It will be devastating. So RRA is very, very important in picking and analyzing all these investment options.
Thank you, Prof. When you made mention of the investment, I think you made mention of savings investment. The option of fixed deposit, is it also an option?
Yeah, I mentioned savings and also fixed deposit.
Okay.
Savings cannot give you much money, but the saving deposit, or what we call fixed deposit, is what rich people do. If you have 3 million that you don't need now, you can approach a bank and put it in fixed, deposit, and they'll give you interest. For those who don't care about interest, it's a good business area. But for Muslims, instead of you doing fixed deposit, you can approach Islamic Investment company like Lotus Capital, among others, or a number of them. I use Lotus Capital. We are not advertising, but we need to mention because we want to educate, we want to sensitize, and want to inform members of the public. Most Muslims see interest as toxic, and the religion does not allow that. So for those people, we recommend non-interest investment outlet like Lotus Capital and also Ato Trust. These are very reliable investment outlets. I'm using both and I'm getting reliable income streams. One annually the other one quarterly. And I'm happy with that. In terms of risk, it is minimal. In terms of return, it is modest. And in terms of accessibility, it is very, very easy. Farmer who is not educated can understand how it works in 3 minutes.
Okay, thank you, Prof. Now, on the issue of the investment, now we are now having some investment, some Islamic bank. I think we have Jais, we have Taj Bank, we also have Sterling.
Alternative bank.
Sterling is having his own alternative bank. Initially, they created a window for it under the Sterling Bank, but now they have alternative bank. Now, what is your advice for the Muslim faithful that intends to invest? Can they also invest in places like that, alternative Sterling Bank alternative option, or Taj Bank or Lotus and the likes?
For Islamic Bank, I'm not sure about their investment portfolio and how robust they are, because there's a difference between Islamic Bank and Islamic Investment Company. Investment are licensed by Security and Exchange Commission to trade in asset, to invest in asset in various ways. So they can grow your money faster than banks. When banks help you with investment, they are going to pull your own resources with their own, and they give you peanut. So why don't you approach investment company and invest directly with them? So that's my advice. But we cannot rule out the fact that they can also help you to grow your investment, because they are highly experienced in portfolio management and also advisory services. But obviously, if they help you, they are also trading with a third party, and they are going to share in whatever you have invested with them. That is my advice on that.
Thank you, Prof. Then I want to ask, because there are some people that will say, "Oh, my investment is in gold. Can we also invest in gold?"
Yeah,
another
gold
precious
is
metal.
one of the surest and stable investment option. But the most important thing is have knowledge and expertise. You can buy gold, pure gold, and keep it for some time. It's just like buying land, and keeping it for 3, 4, 5 years. In 10 years' time, the land will have appreciated. The same thing with gold and silver. So rich people who do not want to invest their money in oil and gas, shares, dividend, some of them invest in gold. The way share capitalization is announced, the way oil share prices is announced, the way derivatives are announced regularly, periodically. Similarly, the value of gold is also announced every day. So if you want to invest your money in gold, try to learn about it. And you have to be very, very careful, because gold, as we all know, is a precious metal. If you buy pure gold and you put it at home, somebody may steal it, and you may go into depression or suicide. So if you trade in gold and you buy pure gold, make sure you approach your bank for safekeeping. You only go to a bank to take it when you need it. Most people don't know that banks can provide safekeeping services for you for precious metals, for raw gold that you inherited from your parents, your CFO. All this you can keep with banks. They will charge you a minimal amount for safekeeping. So all these are very, very important for people. Yeah.
Thank you, Prof. You made mention of Nigerian government sukuk, that there was a time they liquidated the one you bought in 2020 or 2019, and then they gave
2019,
you
yeah,
back
it
the
was
principal.
5 years.
They gave
5
you,
years lapse,
yeah,
this 2024.
they gave you the principal. Now, for the purpose of our audience that don't understand the word liquidate and principal, can you please expand
So
on that?
when government actually sells, security paper called bond or sukuk, it means government wants to borrow money from you for productive purposes. You want to build bridge or what is called infrastructure. And because government is the richest, government at a time may be poor and they need money. So they borrow from you through that particular paper. and they tell you that we are going to pay you back in 5 years. That 5 years is the maturity period or tenure. So when that particular 5 years lapse, it means that relationship, that agreement is liquidated. So the money with which you bought that particular piece of paper is called principal. If you bought 10 million, 5 million, 1,000, government gives you back your principal. But every 6 months, you are paid return. That return is not interest for sukuk, but for bond, it is interest. Because in Islamic finance, we don't take interest, we take return. So that is the benefit you gain by giving government your money, to use for some period. So that is a simple explanation for both Muslims and non-Muslim. ELIP is for Muslim and non-Muslim and all humanity, irrespective of your ideological inclination.
Now, Prof, thanks for the explanation. We'll be coming to the end of the program, but before we go, I would like you to kindly explain the common mistakes that beginner can make when starting their investment journey. Fine, for example, we are now sensitizing people to invest in this asset, invest in these options. But what are those mistakes that is possible for people to make so that they can quickly correct themselves and get?
So we call it pitfalls for beginners or pitfalls of investment 101. Based on this sensitization, people will be salivating. Wow, I want to do it. I want to do it. We call that emotional decision. Don't make decision based on emotion. That's number one. If you make decision based on emotion, you are going to have problem. Investment is not always good. It is both good, bad, sour, and ugly. So don't be emotional. Number two, do your research. I've listed agriculture, gold, precious metal, oil and gas, oilage, real estate, sukuk, bond, shares, fixed deposit, among others. So do your research to understand which of the investment is suitable for your situation in Lokoja, in Ikeja, in Oshogbo, in Iberekodo, in Lafiaji. That is number two, lack of research. Number three is chasing quick return. This wanting to be rich quick. Oh, I want to make it. I want to make it. You remember MMM? These guys are not doing investment. What they were doing is what is called Ponzi scheme. For those who are accountants and financial experts, they understand what we are talking about. Robbing Peter to pay Paul. They will assemble you. Give me 100,000. Every week, I'll be giving you 10,000 for life. So as long as people continue to invest in that particular machine called fraud, they continue to make money. If A brings 100,000, instantly they give you 10,000. Go and bring more people. When you bring B and C, they give you 10,000 from B and C. Then they instruct B and C, go and bring E and F, go and bring G and you continue to mobilize people and they continue to give you money from what you have deposited. The money is not being used. It's just robbing Peter to pay Paul. As long as that money continues to come in into that particular fraud machine, they continue to live big and you think that it is a viable investment. No. So that is number three. Don't go for quick return because it could be devastating and it could be fraud or Ponzi. Then the next one, which is number four, is over concentration. Don't put all your investment in one basket. You have 1 million and you are a beginner and you put everything in sukuk or bond or agriculture. No, split it into three. 300, 300, 400. Put 300 in agriculture, 300 in oil and gas, maybe another 300 in sukuk. We call that portfolio diversification. If one fails, the two others will not fail. The returns from the two that did not fail will compensate for the loss you are getting in the first one. And the final one is ignoring inflation. Some people will invest in something for instance, put their money in savings account. We are going to give you 5% for 1 year on your 1 million. 10% on 1 million simply means 100,000. 5% simply means 50,000. It's good, but ask yourself, what is the rate of inflation? In a year time, your 1 million naira may not be worth more than 700,000. So in next year, bank will give you back your 1 million and 50,000. But in reality, what you are being given back is just 700,000 plus 50,000. You are worse than before. So look at inflation when you are making investment. What will be the impact of inflation in 1 year? So if it is 3 months and the level of inflation will just be 3% and the return is 5%, 5 minus 3, I'm still okay. Or 10 minus 5, I'm still okay. But where you are going to be giving profit of 5% and in that particular period, inflation will be 7%, then you are worse off. So don't put your money in such investment. So these are the 5 errors, pitfalls for beginner going into investment. Thank you.
Okay. Thank you, Prof, for the wonderful session. At this point, we'll be coming to the end of the session. To wrap it up, from the discussion, it has been emphasized that knowledge is indispensable. For you to invest, you need to understand the investment option very well. If you are investing in Bitcoin, you must make sure you have the idea. If you are investing in gold, you must make sure you have the idea. Or if you don't have the idea, you can consult an expert so that you are not going to make a very big mistake. Number 2 is that don't be emotional. Don't say, I want to invest, I have the money. Don't be emotional. You have to take your time. You have to reason to make sure this thing you want to invest in, worth it. So I think, as we said in our episode 4, that as an individual, when you earn your income, learn to save, invest, and consume. Even though if it's at least saving 0.5 and investing 0.5 to start from somewhere. 2025 is just some days to come. So you need to plan yourself, plan your income, learn to save for the future, and also invest for the future. Kindly subscribe to our YouTube channel, to the Client Aspire YouTube channel, comment, and also share.